Hey guys, welcome back to the video. I'm Luke, an ACA qualified accountant, having passed all of my ACA exams at the first attempt. And in today's video, we're going to introduce the concept of debits and credits. We're going to discuss what they are, how you apply them, and how you record different types of accounting transactions using journal entries. So hopefully, once we get to the end of this video, you have a bit of a better idea how you use debits and credits and how they can be really useful as a tool when you're answering questions in your accounting fundamentals exam. So yeah, let's get into it. So a journal entry is a tool used by accountants to present the required double entry for a transaction. It clearly shows which account within the nominal ledger is being debited, which account is being credited, and by how much. So journal entries are especially useful for unusual or one-off transactions, things that may not go through the usual sales or purchase process within an accounting system, like, say, correcting an error within the accounts. So every journal entry entered into the system needs to include a narrative explanation which tells the reader the purpose of the entry and who authorised it. These explanations are really important for audit and internal control purposes because they help others understand why the entry was made and what it stands for. Most accounting systems won't allow a journal entry to be posted unless total debits equal total credits, because this keeps the double entry principle intact. So remember, really important principle, debits has to equal credits. In your accounting fundamentals exam, you may be asked a question where you need to produce a journal entry to record a certain transaction. So it's really important for you to get comfortable with their format and their purpose. So let's bring journal entries to life over the course of the next few slides by looking at some real world examples from a restaurant business. So these are the kind of entries you might see in practice or be asked to produce in an exam. So first, the owner injects capital of £10,000 into the business. That's a debit to the cash at bank account because cash is coming into the business and therefore assets are increasing. But at the same time, we need to record a credit entry to the capital account, which reflects the owner's investment in the business. This entry will increase the business's equity or capital position because the owner has introduced additional funds to get the business set up and running. Next, the business purchases fixtures and fittings for £2,500, which they pay for using cash. So that's a non-current asset purchase, so we need to record a debit to the fixtures and fittings account to reflect the new asset coming into the business. But we also need to credit the cash account because cash has been used to pay for the asset. So that reduces the business's bank balance. Now, what if the business buys kitchen equipment worth £3,200 on credit? In this case, no cash is necessarily changing hands immediately. So we debit the equipment for £3,200 to record the new asset coming in, but we also need to credit trade payables because the business now owes money to its supplier. So that's going to create a liability on the balance sheet. So each of these transactions follows the principles of double entry. For each debit entry we make within the accounts, we need to make an equal and opposing credit entry. Next up, the business pays £1,200 in rent and the payment is made in cash. So since rent is a day-to-day operating expense, we need to debit the rent expense account to reflect the cost that the business has incurred. But at the same time, we need to credit cash because we need to reflect the fact that money has left the business's bank account. So that's going to reduce the business's cash balance by £1,200, and it will also, the journal will also reflect the expense that we've recognised in the current accounting period. Next, let's talk about sales. So it's important to know that there are two different types of sales that a business can make. They can make cash sales and credit sales. So on number 5, let's take a look at the cash sales of £850 that the business has made. And because the business has received that cash immediately, we can, on day 1, debit the cash at bank account by £850. That increases our assets, but we also need to credit revenue, recognise the income earned from those sales. Next, the business has made a credit sale of £1,100, which means the customer has received the goods or services immediately, but the payment is yet to be made. So in this case, we need to debit trade receivables to reflect the fact that the business is now owed money by its customer. So that's an asset. And again, we credit revenue, £1,100, because income has been earned, but the payment is going to be collected at a later date. So both of these sales increase revenue, but only one, the £850 sale, brings in cash immediately. The other £1,100 sale creates an asset in the form of trade receivables. Finally, the owner withdraws £400 from the business for personal use. This is known as a drawing. So drawings reduce the owner's capital position in the business. So we need to debit the drawings account by £400. So that's effectively a reduction in the business's equity. And at the same time, we credit the cash at bank account by £400 to reflect the fact that money has physically left the business to go to the owner. So one important thing to remember here is that drawings are not an expense. They're a reduction in the owner's capital. So they don't affect the income statement, but they do affect the balance sheet because they reduce the business's equity. So to summarise, each of these journals represents a typical day-to-day transaction in the life of a small business, from injecting capital to purchasing assets to making sales, paying expenses, taking a drawing. And while the types of transactions different businesses make will vary, the format of how we record those transactions in the accounts always remains the same. Every journal entry needs to include a debit, a credit, and a clear explanation of what the transaction is to ensure the double entry system, the accounting system that the business uses, it's always in balance, and that the financial records are accurate and transparent. Cool, let's take a look at a journal entry exam question. Which of the following transactions would be recorded with the journal entry debit receivables, credit rental income? Is it A, the business receives rent income from a tenant into its bank account? Is it B, the business is owed rent for a property it has rented out? C, the business receives a rent refund from its landlord? Or D, the business pays rent in advance for the next 3 months? Cool, so the correct answer to this question is option B. The business is owed rent for a property it's rented out. So the journal entry here is reflecting income that's been earned but not yet received in cash. So the receivables account is debited to show the amount that the tenant owes the company we're looking at, and the rental income is credited to recognise the income in the period that it was earned. So let's look at why the other options are wrong. So option A, the business receives rental income from a tenant into its bank account. This would have been an entry which would have increased our cash position and not our trade receivables. So option A is incorrect. Option C is also incorrect. A rent refund would typically be recorded as debit cash, as we're receiving cash from the refund, and credit rent expense, because this is relating to the rent the business is paying for, i.e. its own premises that it's paying its landlord for. So the rent refund would be reflected as debit cash, credit rent expense. And then option D is also incorrect because this is relating to a prepayment. So that's not relevant. Cool, so that's the answer to that question. Hopefully you found everything that I've discussed in this video helpful. If you've got any questions in regards to debits and credits and journal entries, please feel free to fire them off in the comments down below. I'll be happy to answer them. If you like the video, please hit the like button and consider subscribing to the channel. I'm making tons of videos about the accounting fundamentals exam, so it would be great to have you on board. And I'll see you guys in the next video.